The S&P 500 and NASDAQ both closing at new records to start the week, and momentum feels pretty bullish, maybe, ahead of NVIDIA's quarterly results. But beyond AI, our next guest sees two trends at play when looking at the wider market: steadily rising prices and a broad weakening of the U.S. economy. Sounds ominous, sure, but no need to panic. Here's how to play it. I'm here with veteran trader Stephen Sarge Guilfoyle. Sarge, it's good to see you. So as we look at this inflation issue, how should investors be thinking about it?
All right, so I see the economy as evolving from reflation, which we've been into a period of stagflation, which is inflationary without that much economic growth. All right, so what I'm seeing here is you need to price in inflation into your book. Now this is more of a trend trade than it is an investment. So what I'm doing here, rather than put my standard target price, panic point, that whole ball of wax that I usually explain when I explain what I do, this is more where I'm trading the trend as the trend moves on. So it's not really a target price panic point type of thing. It's more of a fluctuating, ongoing thing. The main theme here, I would say, in order to combat inflation, is the commodities trade that you've seen: gold, silver, copper, uranium. I'm in the ETFs that represent all of these places, as well as the physical in silver and gold, as well as electricity. I think you have to be in utilities, because as AI goes on, as Bitcoin goes on, as electric vehicles go on, the demand for electricity isn't going to be what it's been. Demand for electricity nationwide has gone up maybe like less than 0.5% a year for a number of years. From here on out, I think they're expecting 2 to 3% growth per year. So this is going to be an ongoing thing. You're not going to pay a low price for electricity, I don't think, probably for a long time.
So in other words, you're saying pinpoint some of the areas that are going to have consistent inflation, actually, and sort of lean into that and figure out the best ways to play that.
Oh, yeah. And I think what I'm doing right now is I'm maintaining a core position in all of these ETFs and a few other names like Freeport, McMoran, Southern Utility, those kind of things. So I keep a small core position, but as on days where they're up a lot, I sell some. On days where it doesn't work, I try to buy it back. So it's really a rolling ball of wax that has been working for a couple of months now quite well.
And you're also looking, you mentioned the metals, so tell us what you're thinking there and kind of what the best way is to play those.
Well, when you talk about precious metals like gold, now gold versus Bitcoin, I know Bitcoin's not a metal, but it's kind of a metal. I mean, maybe to the people who are really involved in it, it's not, but to an old guy like me, Bitcoin is gold as far as I see it, and probably they're almost the same kind of thing. From my generation, the alternative investment is gold. So I see gold as the way to play that, because gold is less volatile. So I don't have to face the same risk as a younger person. But a younger person might be attracted to cryptocurrencies, especially Bitcoin, because while they face higher volatility, they probably face greater returns over the long run. So I do see them as almost identical parallel trades, but probably separated by how close you are to retirement is whether you should be in gold or Bitcoin.
And what about copper? You know, we've been talking so much about copper being at highs. We had an interesting debate on the show earlier today, or I should say on market domination earlier today, because we're now a different Joe, about, you know, how much of what's happening with copper is being fueled by the short squeeze versus the fundamentals.
Yeah, I watched that show actually, and I heard your guest who sees I guess less potential for copper than I do going forward. She sees these prices are exuberant. She's right about that. But I see copper as part of my electricity trade, and it's part of not only infrastructure, which we do believe that China, which is starting to come out of, it has come out of recession. China probably will have some kind of infrastructure package, because that's what they do when they've been in trouble. They boost the economy through infrastructure. Here in the U.S., we have almost no choice but to spend fiscally. So I do see copper probably. I don't know if this pace of growth we can see, but it remains part of the inflation trade.
And, you know, is silver just kind of going along with gold here?
Yeah, silver's sort of a precious metal, sort of an industrial metal. It's been red hot, thank goodness. I love it, because I've been in it for too long to make it worthwhile. It's finally becoming worthwhile. And I do like silver. It's still catching up, I think. And I think because it's useful both as a store of value and industrially, I think it probably captures some of the growth that you might not see with gold or you might not see with copper. but it kind of plays the middle. So I do, me at least, I need to be in all three, as well as uranium.
Lots of ideas here, Sarge. Thanks so much. Appreciate it.
Anytime.
Thanks.